What do you do, guys, if you are going through a period of losing streaks? Is you take your trades and they're not working so well. What do you do? How do you overcome such period? Well, just try and comment on the comment section to help others as well. And we currently have or from this past data, we have what we call these are peanuts. These are peanuts, and the price have been pushing upwards for some time. Let me go to the 10 minutes time frame. Good, okay. On the 10 minutes time frame, remember that when we are drawing our trend line, we draw the upper trend line and then the lower trend line, and they must have two or more touches. But I would say for beginners, it would be extremely wise if beginners would go for two touches. You want the the candlestick the candlesticks to touch the trend line for about 3 times. Let's measure the second TP. If the second TP was reached, okay, it was reached. Nice. Certainly, the first TP was also reached as well. But you know, guys, I don't really entertain trading with the second TP because sometimes it's a bit dangerous. Now, after you have drawn your trend line, but I want to discuss um today on having a trade expectation. What do you expect to happen? Now, after you draw your trend line, there are possible scenarios where the price might go to take the stop loss of the early buyers. So if the price pushes downward to this saddle zone is what we call a rally based rally. That's to say the price goes up, comes down, and it goes up again. So that's how we call it a rally based rally. Now, scenarios might occur sometimes, possibly, if the price would go down first to take the stop loss of the early buyers, just to take us um some people out of the market before it starts pushing upwards. Or as you have here, the price did not go for the stop loss of the early buyers, it just went up, just it bought at the instant. Now that will say it didn't go down to take the stop loss of the early buyers. So the price just went push upwards. And ever since then it has been buying for some time. And currently it well, I think we have a demand zone here. We have a demand zone here. Why? Yeah, yes. Why is it called a demand zone? Number one, if you let me take out this other saddle zone and the arrows. Okay. Now this is what we call this count is what we call from the 10 minutes time. So let's go to the 15 minutes. Okay. Okay. Now back again on the 10 minutes time frame. We call this guy here, this candlestick. Yeah, we call this a bullish engulfing candlestick. So we have a green candle that covers a red candle. So this is a fresh demand zone. A fresh demand zone. The demand zone is still fresh. And it's still fresh demand zone. So when the price came back to the demand zone, you can see the price pushing upwards again. Now if you place um your orders here, your take profits should be or could be somewhere around this level. Yeah, somewhere around that level. Let's see what we've got here. Okay. Now here we see have something similar to what I just explained. First of all, you draw your trend line. Make sure they touch only the wicks. They shouldn't cut across across the candles. Based on the strategy we are moving with. Now we have a peanuts, a peanuts, a brief consolidation after which the pass push upwards. Your stop loss should be somewhere around something just downwards here. This is being called the shadow rejection, and it field when we're trading the breakouts. You want to wait for the price to break out from the pennants and do impossible retest, which we have here. You see this red candle and the wicks down. So after the green candle pops out, there was a retest and another bullish candle, and the price just continued going up on and on and on. As if you'd want to place your entry to be at the even more secured position, you'd have placed the entries when you'd have allowed the price to run and come back again, which it did. Is what we call a rally based rally. So after the price runs, you wait for the price to return back again to this other zone to place your buy there. Um, well, for me, I think it's wise to always go for settle that are of great quality, because if you look for set up that are of low quality, the chances are that they might work some sense, but they are not so much sustainable. They're not so much sustainable. Let's see what we have here. Let's see. You draw your trend line. I lost trading with the chart patterns. Some might believe that some might say or believe that they don't work. But for me, the chart patterns they work so well. They work so well. And they work for all markets. All markets. So okay, draw your trend line having two or more touches. But for beginners, I would advise you go for the one taking about three touches. And for beginners, even see it should be wise if you start with the higher time frame, like the 4 hours time frame. Well, we can go manageably for the 1 hour time frame. Okay. Now let's see what we got it. Now this is a flag, and this is a bullish flag. You know, bullish flag, we go bearish. So let's measure our TP. This has been our first TP, okay? And our first TP was reached, okay? Now let's check for the second TP. The second TP. Although I don't like the second TP, I don't trade the second TP. I only go for the first TP. And after trading your trend line, this zone that have been our shadow zone, certainly, well, okay, let's say we are open a position of uh 0.01 CAD around this level. Stop loss of about 4 or something like $5. Wow, this is nice. These about 1 to 4 to reward ratio. I I'm sure that if I place or take my entry here, let's say I place my buy somewhere at this level, my stop loss should have been sorry, my sale. My stop loss would have been hit. Truly speaking, the stop loss would have been hit. But let's say I came sometime after this candle had formed. You can see that this rejection was very powerful. If I entered at this particular region, so place my entry, stop loss would have been something above $7, and somewhere making $20. Yeah, ideally, okay, now this would have been okay, something around the reward ratio of 1 to 2 or 3. And just look at this chart. Look at, yeah, the this candle is called um what is okay, or it signifies a very massive price reduction. I've forgotten the name. Timber, hammer, whatever. Now, but easy. You can see that it closed inside the trend line. It closed inside the Bollinger Band. And this indicates that the bearish power is still very much high. It's still very much high. And when that this is a fake out. And when a fake out occur, sometimes it does break out from the opposite direction. So that was why we clearly um see that after the candle formed, the last candle that came in was a bearish candle, and it broke and went all the way down. And you can see that in fact, even in fact it continued selling. But if you allow greed to have the better part of you in this place, you will certainly end up finally hurting yourself so seriously. So seriously. Okay, let's see what we have here. We're doing our trend line. Remember, it connects just 2 weeks. This isn't be cutting across the candle. Let's see if it will work this way. Okay, and well, these are being our take profit zone. Why? Simple. Let me take out the Bollinger Band so to be a little bit clear. Better. Now we have this what we call a drop base rally, and is also called a bullish engulfing handle. So when the price broke out to the downsides, it came to this region. That's why they see as it bought very briefly before the selling continued. A stop loss we are above this high. Okay. Now this what we call this one is called a rally base drop. Rally base drop. So the price when it's consolidated in this what's called this what's it called? This looks like a rising wedge or something like a channel. So when it's consolidated briefly after the consolidation, it got to the top and it broke down. Now for some persons, they might want to trade the trend lines, the touches in the trend line. Well, that's still okay. But for me, I prefer, you know, after a line that is gonna be break to the dark side, just place my sell or my sell limit and I'll wait for the price or the market to do its thing. And you see, trading inside the chart pattern works. I won't say it doesn't work, it works. But it's I deal with your scalping, I need the 10 minutes time frame. So I would certainly just prefer placing my trades around this level and my stop loss. Let's see. Let's see. Okay, let's see. Sell. Okay. Take profit of about $13. Stop loss of about uh $2 loss. And you have to also like don't trade it. It's not wise to move with a tight stop loss. It's not ideal. Your stop loss should be ideal, not this tight stop loss. Whether guys like this video and you subscribe, work on it like this, and just take your time to practice. You may not get it once. It might take time, but usually you have to understand every time you spend with the market, you are growing. Even this or although you may not acknowledge your growth for now, but certainly you are growing. Spare time with the markets. Okay, guys.